Hey, everybody, what's going on? It's James here, and in this video, I want to cover with you why all bulls, I mean, every single bull under the age of, say, 50, should be bearish right now. Get excited about owning assets for better prices. Somebody posted on Twitter today, X, whatever you want to call this thing nowadays. They posted this. What they went on to say was strength attracts strength and weakness compounds weakness. Guys, no. No, 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 no. Just like I pointed out here, they said the best stocks don't go on sale. That's absolutely false. Amazon, I got the number wrong. I went and looked. It was 95%. Amazon crashed 95% after the dot-com bubble. Netflix crashed 76% in 2022. Nvidia crashed 68% in 2022. Bitcoin has crashed 80 and 83% over and over again. Like, how many tech stocks crashed in 2022 and went on to be huge winners? Here's a fun one. How about Carvana? Not even really a tech stock. So Carvana is currently trading at $406 a share. Well, it was 376 in 2021 before crashing 99%. So this guy on Twitter basically saying, don't buy weakness. What? Of course I want to buy weakness if the underlying asset is fundamentally strong, or if I have a strong conviction. And again, I'm going to take measured bets. I'm going to use proper risk management. If I'm doing something like this, maybe I'm going to put in 1% of my portfolio, maybe 2%, something like that. Or I'm going to go in with a larger percent, but then use a stop loss. There's lots of ways to handle it. But think about this. If I was just buying up here and I'm like, oh, I'm a Carvana bull, up, 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 up. Well, if I bought the top, right now I'd be up about 8% after 5 years. But if I bought weakness and happened to catch the bottom, which is unlikely, I'd be up over 11,000%. In other words, every $1,000 invested would be worth about $113,000 today down here. $1,000 invested up here would be worth about $1,080 today. So what do you mean don't buy weakness? What do you mean good stocks don't go on sale? Of course they go on sale. That's how you get wealthy. Markets always return to their mean. And they do it through one of two ways. They either have a price correction where price comes back down hard and comes back down to its mean, or what'll happen is price will go up really high and the mean will be doing something like this, and then price will just consolidate for days, weeks, months, years, until eventually they catch back up with each other. But either way, this is a really easy place to get involved in a market, because if I like a stock or I like an asset and it's back at the mean, whether it got there through a crash or whether it got there through a sideways consolidation, once it's back at the mean, I'm all about it. What I don't want to do is overpay for assets. I don't want to pay a premium on an asset. So another take that I saw on Twitter was this idea that, somebody that had a much fancier education than me, again, so I'm not knocking them. They're probably a really smart person, like no sarcasm. They were essentially saying, I'm not worried about an AI bubble, because even if it is, if I invested at the top of 2000, from then until today, the return's still over 7%. It's only at 7% today because of the euphoric stage of the market that we're in this very moment. In fact, after the dot-com bubble, if you were investing in the S&P 500, the annualized return was only about 1 to 2% over the next 12 years, while at the very same time, treasuries returned 6 to 8%. So let's look at a couple of quick charts right now. We'll look at a chart on Bitcoin. And the one thing that I would say about Bitcoin, other than obviously, I've talked about this head and shoulders, the target at around 35K. We've talked about that. There's no need to recover it. If you're new to the channel or you haven't seen that, go back out. I think it's the last video I talked about that in. But one thing that I haven't talked about is the CME chart, right? If we look at the CME chart for Bitcoin, what I saw actually happen was the bulls were trying to fill this gap, right? It's got this gap back here, the saying gaps love to fill, all that kind of stuff. The bulls tried. They really tried to fill that gap. They pushed it up, and then there was just bears. There was just supply sitting there that pushed that back down. So I think right now the play on Bitcoin, again, I'm still bearish. I'm still looking for more downside. But the play on Bitcoin is to really see what happens with this gap. If the bulls can fill the gap, this could punch higher and actually put in a very significant bear market rally, or even transition eventually into a new uptrend. Those are not the things that I expect, but they are possible, right? If this starts transitioning into a rally and starts taking out this high back here, we've got to rethink this idea of $35,000 Bitcoin. But until that happens, this just looks like consolidation and a downtrend. A lot of people are ignoring charts. They're just going off of narratives, like the 4-year cycle narrative, that every time Bitcoin does this narrative, and listen, that is in some context, that's how trading works, how market analysis works. Like when I say that Bitcoin tends to retrace 80%, blah, 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 that's also the same thing. I'm basing that off history, except that's not just Bitcoin. That's like all assets, period. Right. So I'm using broad technical analysis with thousands and thousands of examples. Whereas people who are only using Bitcoin narratives, they're using a lot of times something that's happened 3 times or 4 times. So for example, they'll say, Bitcoin it always makes a new high. Okay, so let's think that through. The first bubble was around $32. Next bubble was around $1,000, 200 depending if you want to get super specific, but the major bubble is at 1,000. So that's 2 bubbles, 30 and 1,000. Next bubble is at 20 grand. So that's 3. The next bubble is at 69. That's 4, right? Went up past that. So we've essentially done this 4 or 5 times. Now, if you know anything about statistics and probability, that's not a large enough sample size to draw any conclusions. It's just not. So when I say, hey, markets, parabolic markets tend to retrace 80%, that's not just because Bitcoin has done that every single time, every single cycle, which it has. It's because that's how all markets tend to behave. All markets tend to retrace 80% when a parabola is broken. And if this is the parabola, then 80% is the level that is most likely to occur. It is not a guarantee. Things can change that. For example, we have more institutional participation now than ever before. And so maybe this just doesn't have the same type of behavior in the past. And that could mean it doesn't go down here. It actually goes up from here. But you also have to consider that a lot of people seem to be very, very confused about what distribution is. One of the key things that you look for when you're trying to determine if an asset is in distribution is you look for what's called relative weakness. Is the asset weak compared to other assets in the market? And I've covered this in plenty of videos, right? Bitcoin is weak. I've showed how it's weak versus gold. I've showed how it's weak versus the QQQ. I've showed how it's weak versus Mag 7. A couple of days ago, I showed how it was weak versus Coca-Cola, the bottling company. Over and over, like somebody, I guess another company people are excited about is this semiconductor ETF. Again, Bitcoin super weak versus this stock. Right now, from the 2025 high, Bitcoin is down about 68%. And it couldn't even take out its 2021 high. That's relative weakness. That is a sign of distribution. That is not a sign that big players are accumulating. It is a sign that big players are leaving the space. A lot of people hear me say that and they're like, so you think Bitcoin's going to zero? No, I absolutely do not think Bitcoin is going to zero. I think the chances of that happening are almost non-existent. I won't say impossible, but I think it's less than a 1% chance that happens. I don't know what would make that happen. It would have to be something catastrophic. Maybe Satoshi is discovered and sells all of his Bitcoin. Maybe it somehow becomes illegal because of energy crisis to mine Bitcoin. Some major fundamental driver would have to occur. I think the most likely thing is that we have a bear market, which we're in the midst of. I think Bitcoin goes down, possibly, to a normal retracement down around 35K. If stocks melt down, probably under 10K, but only if stocks melt down. And then I think Bitcoin has another bull cycle. I just don't think the next bull cycle makes a new all-time high. I think Bitcoin has been essentially in price discovery for the last 10 or so years. And I think what we're going to find is that as it becomes a more mature asset and more institutionalized, I think it will have bigger markets, bull markets in the future. I just think they'll be more muted. I think the returns will be smaller. So maybe, for example, hypothetically speaking, maybe this ends up going down around 35,000. Maybe it goes back up to about 100,000 in its next bull cycle and then puts in a lower high. Or maybe if the stocks melt down really, really horrifically, it goes all the way back down and retests its 2022 lows, right? Maybe even as low as 12,000, 10, 12,000, something like that. And then again, maybe it consolidates, starts a new bull run, and heads back toward 100,000 and then puts in a lower high. Either way, again, bulls are going to be upset. Like, oh, you're garbage. You think it's going down. How dare you? If you're bullish long term, you should hope this happens. Because even if I'm right and it only goes to 100,000, well, 35K to 100 is a really good return. And 10K to 100 is a really good return. And if I'm wrong and it puts in these lows and then it goes here and just keeps going, well, that's even better for you. But either way, there's no reason to be upset that I think it's going lower, because if you truly believe in Bitcoin and you're truly somebody that thinks Bitcoin is going to replace fiat and you think it's going to 500,000 or a million, or I haven't seen claims as high as 5 million, which we'll just ignore the market cap requirements for that. If you think that's the case, you should be rooting for it to go as low as it can go before that happens so that you can buy as much as you can buy. When I started with Bitcoin originally, it was 2014. When I started investing heavily, it was 2017. And back then, it was like people would have dozens of Bitcoin, sometimes even hundreds of Bitcoin. It was not that uncommon. Nowadays, I see people talking about stacking sats. Back then, it was kind of like just kind of a joke, stacking sats, right? Satoshis, because Bitcoin was like $1,500 in 2017. Now they're stacking sats because that's all they can afford, right? People are excited about owning 0.01 Bitcoin. Think about that. If you can only grab 0.01 Bitcoin, no matter how high it goes within reason, it's really not going to make a big difference in your life. If it goes way down and you can get a whole Bitcoin or maybe a couple of Bitcoin, and then it goes way up, those could be life-changing returns, not just for you, but for your future generations. I mean, you could quite literally create generational wealth if this thing crashes and then has another major bull run. But if it just has a major bull run from here, that's boring. So I'll go ahead and wrap the video up there. Please remember, I'm some guy sitting in a spare bedroom. I've been wrong before. I will guarantee you I will be wrong again. Always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable assets. If you enjoyed the video, give it a thumbs up, subscribe to the channel, and as always, please remember to use proper risk management and trade safe.